All right, let's talk about the housing market. For years, it's been this wild, unpredictable frenzy, right? Well, it looks like things are finally hitting the brakes. So, what does this new, calmer reality in 2026 actually mean for your wallet? Let's dive in and break it all down. If I had to pick just one word to describe the 2026 housing market, it's got to be this: equilibrium. A real sense of balance. I mean, just think back to the last few years. The insane bidding wars, prices just soaring into the stratosphere. Well, it seems like that chaotic chapter is finally closing. Equilibrium. Okay, that sounds nice, but it's a bit of an abstract word, isn't it? So what does it actually mean for you? Whether you're thinking about buying, maybe selling, or you're just kind of watching from the sidelines. That's the big question we're going to tackle. Okay, so let's start with the big picture here. The new normal. What we're talking about is a market that's just calmer, a lot more predictable than anything we've seen in a long time. So this new balance really rests on three main pillars. First up, price growth is finally moderating. Yeah, no more of those shocking double-digit jumps we got used to seeing. Second, the number of homes for sale, the inventory, is slowly but surely creeping up, which is great because it gives buyers more choice. And third, mortgage rates, they're finally settling into a more stable, predictable range. You put all of that together and what you get is a much healthier market for everybody involved. So you might be asking, what's really driving this big shift? Well, it pretty much all comes down to two main engines of change that have been shaping, well, everything: mortgage rates and home inventory. Let's dig into rates first. Wow, okay. This chart right here tells a really fascinating story. I mean, we all remember those unbelievable lows, right? Below 3%. It honestly felt like free money. And then, bam, rates just rocketed up to highs we haven't seen in decades. The key thing to get here is that the market has now fully absorbed the shock. That era of super low rates, it was an anomaly, a blip on the radar, and it is behind us for good. So, what is the new reality then? Well, most of the big forecasts are pointing to a pretty stable range, somewhere between 6 and 6.4% for a 30-year fixed mortgage. The key here is no more of those wild swings from week to week. This is the new baseline. This is the number you should probably anchor your expectations to for a while. Now, these higher rates created something really powerful that economists call the rate lock effect. Let me break it down. It's simple, really. If you're a homeowner sitting on, say, a 3% mortgage, are you going to be super excited to sell your house just to go buy another one at a rate that's double what you're currently paying? Probably not, right? And that hesitation has been a huge reason why the supply of homes for sale has been so tight. And look at this. It just perfectly illustrates the scale of the issue. Get this. As of mid-2025, a staggering 80+% of homeowners with a mortgage had a rate way below what the current market is offering. I mean, it's no wonder inventory has been so incredibly tight. But, and this is a big but, the good news is that lock-in effect is finally starting to ease up a bit. So why is inventory finally starting to recover? Well, it's not just one thing, it's a mix of stuff. We're seeing more new listings hitting the market, which is great. Builders are also steadily adding new homes to the mix. But honestly, the biggest thing is life just happens, you know? People have babies, they get new jobs and have to relocate, or they just want a different lifestyle. And eventually those life events start to become more important than the financial hesitation of giving up that super low golden handcuff mortgage rate. Okay, so let's recap. We've got rates stabilizing. We've got inventory slowly rising. So what happens when you put those two big pieces of the puzzle together? Well, it leads us directly to the part that probably matters most to you. What's happening with home prices? And check this out. Here is a number that really tells the story of how the power has shifted. According to Zillow, the average cumulative price cut on a single listing is now around $25,000. Just let that sink in for a second. We've literally gone from a world where sellers could just name their price and then sit back and watch a bidding war explode, to a world where they're having to actively cut prices to meet buyers where they are. It's a totally different ballgame. Now, let's be super clear about something. This cool down doesn't mean homeowners have lost out. Oh, not at all. Far from it. I mean, look at this map. Prices are still up almost 50% on average nationally over the last 5 years. That's created near record amounts of equity for so many people. But the real takeaway here is that the crazy breakneck pace of growth is over. And now, more than ever, what's happening in your specific local market is what really matters. And when we look ahead, all the forecasts pretty much confirm this return to reality. The days of 15–20% annual price jumps, they're over, gone. Instead, we're looking at forecasts for 2026 that are all over the place, from slightly negative to some modest single-digit growth. This is what a more sustainable, more balanced market actually looks like. Okay, so with all of that as the backdrop, what does it actually feel like to buy or sell a house right now? Let's talk about the art of the deal, because believe me, the balance of power has absolutely shifted. Man, the contrast just couldn't be more stark, could it? Do you remember the absolute chaos of the pandemic market? The frantic bidding wars, buyers waiving inspections, waiving everything, making these desperate offers way over the asking price. Well, the 2026 market is basically the polar opposite. Now we're seeing price cuts become the norm. Buyers actually have breathing room to think and get an inspection. And good old-fashioned negotiation, it is officially back on the table. And it's like Cara Nang, a senior economist at Zillow, said, sellers have built up so much equity over the last few years that they actually have the flexibility to offer these discounts now. And it's these price cuts that are finally bringing listings back into a range that more buyers can actually afford. And of course, this trend looks a little different depending on where you live. In those super expensive coastal markets, think San Jose, you're seeing the biggest cuts in terms of sheer dollar amounts. We're talking huge numbers. But then you look at more affordable markets like New Orleans, and the cuts there represent a bigger percentage of the home's total value, which can mean really significant savings for a buyer. All right, so this brings us to the final and probably the most important question of all. What does all this mean for your next move? Let's wrap things up with some real, actionable strategies you can use in this new market. Okay, if you're a buyer, listen up because the game has totally changed in your favor. You've got leverage again, so what do? Pay super close attention to how many days on market a house has. The longer it's been sitting there, the more flexible that seller is probably going to be. And definitely dig into the price history. If you see they've already made a few price cuts, that's a massive signal that they're motivated to sell. But really, the most important thing is just to remember you have time to breathe now. You can negotiate again. That frantic, gotta buy it now pace is over. And what if you're a seller? Well, for you, success now is all about adapting to this new reality. Number one, it is absolutely critical that you price your home based on today's market data, not the crazy peak of 2021. Buyers are way more savvy now, so you have to go in expecting to negotiate. This is where your agent's local expertise becomes your secret weapon, really. They can help you price and position your home just right to attract that perfect offer. So here's the big takeaway. After years of just absolute extremes, the housing market seems to have finally found its balance. It's not really a seller's market anymore. It's not really a buyer's market either. It's just a market, a more normal one. So the real question for you is, now that you know the new rules of the game, what's your next move going to be?